Hello and welcome back to Dukascopy TV. The earnings season is just getting underway and I am joined by Francois Oesch from Heritage Bank to discuss this with him. Welcome, Francois. Thank you for joining us today.
Thank you. Good morning.
So how do you feel about stocks and currencies as we enter this earnings season?
Well, apparently we entered the mid-year holiday season on the markets, which means that historically the volumes are quite weak and lower. It's quite interesting to see that looking at entering this season and looking at this earnings season that just started on Monday with the US companies started to report, we might be at risk for stocks and risky assets in general. History tells us that the period going from mid of July till end of August normally tends to be a consolidation period for risky assets, or perhaps even worse, kind of a correction period. If we have a look at the charts behind me concerning the earnings reported for the first quarter of this year, we've seen that around 70% has beaten the analyst estimates, which was quite a good news, knowing that we were standing in kind of difficult times in terms of economic growth. We knew that the economic growth was challenged, especially in the US as well as in China. And it's going to be interesting to see, if you look at the next chart, what will be reported for this second quarter. I guess it's a bit early now to have a look and assume if we're going to be behind or above the consensus. So today, concerning this second quarter earnings, I think the situation did change quite a lot, especially in terms of slowing economic growth in the US that has been showed through the macroeconomic data, as well as the slowing economic growth and demand in China. We've seen commodities being beaten over the past few months, which could give us an idea that companies will probably not give good guidance on their earnings.
Great, thank you. And the Canadian dollar is quite weak at the moment. How do you think it is going to perform during this season and what will affect it?
Well, concerning Canadian dollar, I think we can say this is a commodity-linked currency, knowing that it will go alongside with what is going on commodity side. We've seen oil coming off, as the chart shows behind me. The correlation between oil and Canadian dollar has always been very strong over the past few years. We've seen some data collected by Bloomberg since 1993, where when the correlation between these two assets was at around 0.3. Today we stand at 0.88, which means that as soon as we see some correction on oil in particular and commodities in general, the Canadian dollar is suffering.
Okay, and what is your outlook for the Canadian dollar for the next year?
Well, the outlook today, in terms of technical analysis, we are just above the moving averages here, meaning that people getting a bit more cautious on risky asset. Going on a risk-off mode means that people are buying US dollars across the board. The Canadian dollar is very linked also, and the opposite of the US dollar. And I can imagine that this lot of interest in buying US dollar could weigh on the Canadian dollar in the short to medium term.
And you mentioned oil earlier. Can you tell me a little bit more about how it's going to perform during this earnings season?
Oil is going to be probably under pressure. We've seen a sharp correction over the past 2 months. I think the slowdown that has been reported through the economic figures from China is probably also a sign that oil could stay under pressure for the summer. I wouldn't be surprised also knowing that Chinese consumptions accounts for 19% of the global consumptions. We are very close to the 20% consumption from the US. And it takes a very strong stake of oil consumption at the time being. So if China, we think, as we think is entering a soft landing pace and could perhaps enter something more severe, I think oil will remain under pressure. Another thing that gives me this impression also is that all the defensive currencies like the yen, the US dollar, shows that people are a bit risk averse today, and that could be a headwind for crude oil and commodities in general.
And finally, Francois, what is your outlook for the US and Canadian economies for the next year?
For the US economy, we are waiting GDP at around 2%. There are lots of issues to go for the remaining year, especially the elections in the US. The market is expecting a QE program from the Fed, a third QE round. Today, I think it's probably a bit early, as we tend to see that US stocks are still on the green territory. And on the other side, the Canadian economy should also grow at around 2% something, which will be in line with the US. So there is no big issue to determine the evolution of the Canadian dollars versus the US dollars in terms of GDP growth.
Brilliant. Thank you very much for sharing your views on this and for joining us today in the Geneva TV studio.
Thank you very much.
That's all we have time for right now, but as usual, stay tuned to the Dukascopy website for more interesting interviews and press reviews. Goodbye for now.